Hello all, welcome to today's webinar. We at Cleartax have created a big filing week for our clients so that they can avail the benefit of our tax filing platform and file the income tax return as easily and as conveniently as possible. Now, because of this big filing week, big filing days, we have arranged certain webinars wherein we are going to try to solve or answer your burning question regarding taxes or certain disclosure in the income tax return. Right now, we are going to talk about RSUs. Now, RSUs have been a burning question. The disclosure, the taxability of RSUs have been a burning question for a lot of people. Now we thought this is a right time, a good time to address those queries, address those confusions. Now, before we start, let's try to understand what is an RSUs. RSU or ESPP are a reward given by the employer to their employees. Normally, we have seen RSUs are given to people of a multinational organization who have certain office, some office in India, and they are getting, those employees are getting shares of the parent entity, which is actually located in USA or any other foreign country. Now, since at the time of giving out the RSUs or ESPPs, what normally happen in case of RSUs, the shares of the entity, the parent entity, are given free of cost if they serve a certain amount of time in that organization. In case of ESPP, what happens? Shares of the parent organization are given at a discounted price. Now, these items, the RSUs or ESPP, which are given at a discount or nil pricing, they become a perquisite in the hands of the employees, right? So, if they are becoming part of their pay package, the salary, uh, they need to be paying the taxes on them as well. So at this juncture, what the parent entity or the broker of the parent entity, what they do is they withhold a certain number of share to cover the taxes of that perquisite. They sell out those number of share and repatriate the sum in India to meet the tax obligation in India. Now this phenomena is called sell to cover transaction. Now, if your Form 16 does have this type of material, in that case, income wise, there is nothing much to be done because perquisite has already been captured in Form 16. The taxes on that is also captured in the Form 16. However, certain disclosure is required to be made in the income tax return. Now, these shares, even though they are listed in USA or any other foreign country, they are not listed in India. Therefore, they are treated as unlisted shares. Right now, if they are unlisted shares, in that case, they need to be disclosed as unlisted share in the proper segment of income tax return. Secondly, since these shares are located outside India, they are listed outside India, in that case, they need to be disclosed in the Schedule FA, foreign asset in proper segment, right? So there are certain items that need to be disclosed in the Schedule FA. For example, name of the entity, address of the entity, what was the initial investment, what was the highest value of that investment, which is termed as peak investment, what is the closing balance of that investment, how much income you may have earned from that foreign asset, etc., etc. Not only that, you may be having them in a broker account. There are a lot of broker accounts in this world, so you may be having those shares in those broker accounts as well. So details of that broker account should also be disclosed in the Schedule FA. So if you have received RSUs or ESPPs, they need to be disclosed, the earning from it, or at the time of vesting, it should be captured in the form 16 itself. Therefore, income wise, there is nothing much to do, but disclosure wise, you have to disclose in two places. Secondly, you may be having some income from these RSUs or ESPPs. Now, RSUs or ESPPs essentially are shares of a entity. Now, if you are holding shares of that entity, you are supposed to get some amount of dividend, right? So, if you are getting the dividend, whether you repatriate the sum in India or not, or whether you are reinvesting the sum of dividend uh, in purchase of same share or a different share or any other financial asset, it does not matter. It should be reported as income in your income tax return, that dividend earnings. Therefore, it should be disclosed as foreign dividend earning in your income tax return. Secondly, whenever the foreign entities are giving you dividend, at the time of giving out the dividend, the broker, what they do is, depending on the TRC, tax residency certificate that you have provided, they withhold a certain amount of taxes, right? So they normally term it as withholding taxes. Now these amounts are paid in USA or any other foreign country, right? Since you have paid certain amount of taxes outside India as well, you are supposed to get a credit for that taxes that you have paid outside India. Now, to get that credit of tax that you have paid outside India, you need to be making a claim for it. Now, this claim can be coming under Section 90 tax relief, right? To get that relief, you also have to file form number 67 in the income tax portal along with certain supporting documents. So, in your income tax return, if you have received dividend from RSU units or ESPP units, income should be reported as foreign earnings, foreign dividend earnings. Secondly, if you have paid withholding taxes or withholding taxes have been collected by the broker, that need to be claimed as foreign tax credit in your income tax return. Furthermore, to claim this refund, form number 67 has to be filed along with the income tax return within the due date of filing the income tax return. However, as per a notification issued by the department last year, Form 67 can be filed anytime during the assessment year. However, it is prescribed, it is recommended that you file Form number 67 before filing the income tax return. And one final point, it has to be remembered that whenever you are getting the money in your bank account, uh, you will be getting the money in your bank account according to the foreign exchange rate that is appearing on that date, right? However, to report the income in income tax return, the foreign currency conversion rate, the foreign currency conversion rate should be as per the income tax rule and not as per the foreign exchange rate prevailing on the date of deposit, right? So if you are having RSUs or ESPPs, please, and earning some dividend, please keep this thing in mind. Another source that can come from RSU or ESPP is capital gains. Now, capital gains actually happens whenever you are selling those RSU or ESPP units. Now, depending upon the holding period, the capital gains will be calculated. Again, since these shares are listed outside India, they will be treated as unlisted shares in India as they are not listed in any of the recognized stock exchanges in India, right? Therefore, the holding period for them to be a long-term asset is 24 in excess of 24 months. If they are held for a period less than 24 months or up to 24 months per se, in that case, they will be a short-term asset and short-term capital gains will be arising. If they are held for more than 24 months, they will be considered to be a long-term asset and long-term capital gains will be arising. Furthermore, in case they are a long-term asset, indexation benefit will be available on that particular gain, and the rate of tax on the long-term gain is 20%. Again, foreign conversion rate or foreign exchange rate will be as per the income tax rule and not as per the date of deposit rate, right? Also, since they are any other asset other than movable property, section 54F benefit can also be taken for long term capital gains. That is, if you are selling off these assets, right, and claiming, or rather buying a flat or a house, right, in that case, depending on the amount of your investment, you can claim tax break under section 54F. In case they give you a short term capital gains, it will be taxed at the rate of 30%, or rather your slab rates, not 30%, but your slab rate. So this sale should also be shown in the Schedule FA. So if all the assets are completely sold off and you are left with nothing, then also it needs to be shown under Schedule FA, right? Also, one quick clarification before uh, you know uh, before submitting the details, before disclosing all those items, it needs to be seen what is the tax year that is followed in the country in which these shares are located or listed. Depending on the tax year, disclosure date in the income tax return of India might change. So there you have it. This is the details on taxation of RSUs or ESPP. Now, I hope you have some sort of clarity on how to show the income and how to disclose them in your income tax return. This week, we are celebrating big filing days, and we hope to see you in our tax filing platform, wherein you will be able to file your income tax return quickly and efficiently. And thank you for joining with us. Have a great day.